think let's start off with some US economic data, non-farm payrolls, and I mentioned for the first time since World War II, the economy has experienced net zero growth in jobs, neither to the up or to the downside.
Yes, although there have been many times when it experienced big cuts, so it is not like the worst ever, because as I say, there's been many months with big declines. But in a recovery, that's definitely a worrying pause in job creation. And we are at a situation where up to now we have been having bad confidence data in the US, even though the actual real economic data were mediocre but not that bad. Now the worry is that negative confidence, are these negative developments in financial markets feeding into actual economic data? Yeah. Are businesses starting to retrench because of the conditions?
Oh, well, businesses are perhaps also starting to feel slightly less optimistic about the future because there is very little uncertainty when it comes to stimulus, when it comes to a possible double dip scenario, and also the effects of the end of quantitative easing 3. Is that a fair assumption, Jean-Francois?
Well, we haven't even started quantitative easing 3. So
well, quantitative easing, so I'm jumping the gun. The effects of the end of quantitative easing 2.
Well, the thing is quantitative easing 2 has come to an end in the sense that the balance sheet is still there. They haven't sold these bonds they bought, but they stopped buying them. So the addition of new liquidity has come to an end. And also you've got to remember that businesses have been nervous throughout the recovery because we are in a situation where we are not with a normal business cycle. There are still problems with balance sheets. Yeah. There's still a healing of imbalances that needs to take place. And all businesses knew that the situation was fragile. So a couple of bad news and the tailspin can restart. That is a worry.
Well, unemployment, jobless rate in the US still sitting at 9.1%. So no movement there.
I was going to ask, in terms of your models, at zero job growth, how long will it take before we return to full employment in the United States? It's a trick question, by the way.
Well, if we stay at zero, we're never going to return to full employment. We're going to rise further because we're not even able to absorb the increase in the labor force.
Now, I was thinking, though, do you think that US will ever go back to like 4 or 5% employment rates?
It's very debatable. At the peak of a cycle, possibly, but a lot of some economists at least arguing that the structural unemployment rate has gone up in the United States. So there are a lot of the jobs that were created back in the past decade in real estate, in finance, are lost for good. And I think there's some value in that. The economic growth model has got to change from what it was 5-10 years ago, and the new normal might be a trend rate of unemployment that is higher than before. Probably not 10%. But maybe not 4 or 5% anymore.
I know economists like to forecast. So what kind of numbers are we looking at here for South Africa? Because we saw the GDP numbers for the second quarter of this year, 1.3%. Let's look forward. What kind of numbers can we expect for the third and fourth quarter? Because it seems that most economists out there are starting to adjust their forecast and downwardly revise most numbers.
Well, we've all started doing it. I've definitely done it. I think most of my colleagues have done it. When you get 1.3% in the second quarter, obviously you've got to be prepared for having less than what you thought a few months ago. Most people were thinking close to 4% a few months ago. Now we'll be lucky if we're above 3%. I've been going for 3.4%, but that was before the 1.3%. Slight downward revision to Q1 as well. Q3 is not going to look that great. The PMI is suggesting that businesses were hit by the strikes in July, and there hasn't been much of a recovery in August. So unless we have a very good fourth quarter, we could be somewhere around 3%, if not slightly less.
What are the key drivers in those numbers? In other words, where does the variance come from in terms of what surprises you both upwards and downwards?
The big variance has been in the primary and secondary sectors. Part of the good surprise of the Q1 numbers was a revival in manufacturing, which in retrospect looked very much a result of restocking. That restocking didn't last. Global conditions became more adverse. We had the Japan disruptions, we had strikes, and all of a sudden manufacturing tanks again in the second quarter in July, and that drags down growth together with agriculture and mining. If you look at the services sector, the contribution to growth was actually stronger in Q2 than Q1. So all of a slowdown with the other
You're talking about the restocking process, obviously contributing to a massive increase within the manufacturing space. Are we looking at more sustainable manufacturing numbers, which are just above that break-even point of 50?
Well, we might get them, if the global situation improves. But my worry is that we're not going to get strong growth in manufacturing. If you look at manufacturing, we have seen some growth over the past year and a half, 2 years, but we are still well below the levels reached before the recession. And you compare manufacturing to exports, this is the same message. Our manufacturing sector suffers from a poor performance of exports.
Yeah.
But then, whenever there's a bit of good news, people buy the rand. That's not going to help our exports.
Okay, so double dip or not globally?
We don't go for a double dip, but we are talking about a fairly protracted period of disappointing growth, basically.